taking a big look at CPI today. Now, the market is doing some wild stuff this morning, as we can see. Excuse me while I drink a little bit of coffee and try to wake up here. We've got, it seems that my music is loud. Let me turn down the music a little bit. There we go. How's that? Is that a little bit better? Hopefully that's a little bit better for you guys. Yeah, we got CPI today. And, you know, it's the most important CPI of our lives, of course. There's a little bit of tongue-in-cheekness in there. Obviously, it's an important one. You know, we're at pretty pivotal levels, and maybe this CPI is going to be the thing that takes us higher or lower. And I ran a little poll this morning on my Twitter feed. If anybody is interested in checking it out, you can follow me at Krutzky Trades. I posted a few different charts, all of the futures charts, ES, NQ, RTY. We can take a quick look at them real quick and just kind of see, you know, talk about kind of what I'm seeing over here. And go to the hourly real quick is kind of what I was seeing. You know, across the board on the indices, at least, we have what appear to be accumulation patterns, these falling wedges. NQ is a little bit of an outlier. NQ made a new low. If we check out ES, very similar pattern. However, it did not make a new low, and they're breaking out of these accumulation patterns this morning. So, you know, maybe they're front running the move. Maybe they're just trying to trap some late to the game players. I'm not really sure what this initial move is all about here. This could just be just sheer technicals. Who knows? I was also watching crypto. Crypto's been a leader. Crypto's kind of been leading the market for some months now. And we saw a big move down on Bitcoin to the tune of $400, $500. All right, we're looking for less volume on the music. How is that? Hopefully that's better. Ethereum also big move down to the tune of, you know, about $50, $60. I watch Solana a lot. I don't know. It's just another bellwether for me. This one kind of took a big dump, $1.50 on Solana over the past couple of hours. So crypto making a move lower while the indices make a move higher. Kind of interesting. We have about 25 minutes until the CPI print, until we get the big news. So what I wanted to do ahead of the print, I wanted to kind of take a few moments to go over. Hold on one second. Everyone's telling me that I need to change my volume up. Lines got swapped. Need to turn me up, music down. All right. So tell me if I don't think that's gonna help. I think this is what's gonna help. Tell me if this is more like it, y'all. How's this? Is this better? Sorry about that, you guys. Okay, much better. All right, so back to where I was going with this. I'm a little rusty. We haven't done one of these live streams in a minute, so I apologize for the rust. I wanted to go over some of the new stuff that we've added to the platform. You know, I imagine that a lot of you guys are users, but if if you're new to the platform, you're not familiar with some of the new additions, or if you're not currently a TrendSpider user, let me show you some of the things that we've recently added. First things first, right here, this is multi-symbol view. And what is multi-symbol view? It's exactly what it sounds like. It allows you to watch a bunch of tickers at the same time. You can watch up to 16 unique tickers here. I've just got the 3 index ETFs. Awesome, Devinder. Thank you for being here. New user. Really, really happy to have you. James, cool. Robert, what's happening? Thomas, Mangoes, Wendy. Good to see all you guys. So multi-symbol view allows you to look at multiple symbols at the same time. For those of you who kind of like to pay attention to what's going on across the board, this allows you to do that. You can access this in a number of different ways, but if you click on your name, kind of the most efficient way, click on your name and scroll down to the open multi-symbol view option. It's also in when you go to switch workspaces, it's also available there. So generally I like to open up a different browser tab and have multi-symbol view hanging out next door to my main chart that I'm watching, whatever it happens to be at the time. So that's kind of the first feature. Obviously, I'm looking at futures here. So futures is another one of the new things that we've recently brought to the platform, live index futures. And a bunch of different futures, actually. If you have not yet signed up for futures, they are about $8 a month for live data. And all you need to do to sign up for them is write in a futures symbol in your search bar up here. And it'll bring you to like the sign up page. You have to fill out a little paperwork. It's super easy. And actually, while we're talking about that, let me give you this here. This is a bit of a breakdown of that sign up process that I just linked in the chat. So if you're having any trouble with the future sign up process, that video will walk you through it. Next piece here. Now we're going to do a little bit deeper of a dive because we've gone over futures before. We've gone over multi-symbol view before, but some super new things that have been recently added that I'm really excited about, actually. If you go up to your other data button, you'll see a couple of new items here: Federal Reserve economic data and market breadth. Market breadth has been around for a little while, but we added something new to it that I'm going to show you. So first, Federal Reserve economic data, FRED. You'll see this when you have it turned on. Again, click on the 3 dots, check the box, and then it'll appear in your indicators list up here. Generally speaking, this is going to work on the bigger time frames. So I'm going to go to the weekly here, and again, it appears as a lower indicator. Now, Federal Reserve economic data is wildly, there's a lot to it. We have about 5,000 unique data points available for you guys. So what you want to think about when you're thinking about Federal Reserve economic data, things like consumer loans, things like household debt, credit card balances, the unemployment rate, consumer price index, like we're watching today. These are all values or all pieces of data that are available within this FRED indicator. And what's really cool about this set of data is, at least in my opinion, is being able to look at it relative to stocks, right? So for example, let's look at, consumer loans. So what you do, in order to pull up any piece of FRED data, because the list is so long, like I said, there's 5,000 unique data points here. there isn't really a drop down and a scroll like you're used to on the platform. You have to kind of know what you're looking for, at least to some degree. So type in the search bar, I'm going to type in consumer loan, and we're going to pull it up here. Now, aggregation and transformation, if you're interested in understanding what those values are, we do have a bit of a write-up on them. For the most part, you don't really need to change these presets. You can, of course, transformation's going to, it's just going to change the way that the data is presented. Aggregation, for example, let's say you have a data point that comes out every day, but you're on the monthly time frame. It's going to show you the last print of the month as opposed to somewhere in the middle, right? So that's how you can kind of think about it. 95th percentile is kind of interesting because it removes outliers, right? It removes like the weird 5% that are just weird data points. If you're looking at a very, very long system of data points, or a long series rather of data points, it can kind of like smooth them out a little bit. But for the most part, you're just going to want to leave these two values unchanged. And again, so consumer loans on the credit card, we can look at this value and kind of see what's going on there. Another one that's kind of interesting, household debt. We'll go real median household debt. So again, just gleaning an understanding of where these big fundamental data points are relative to the markets in general. You know, one thing that folks have been talking about a lot recently, I'm going to go to the unemployment rate because this is something that I found quite interesting. Let me see here. Yeah, this is what I'm looking for. So there's been a lot of talk recently about, you know, if this bear market gets worse, what's going to happen with jobs? And people are looking for proxies for kind of like how to anticipate what could happen with jobs. I'm going to go over to the SPY here because this is kind of the example that I've seen people talking about, and kind of the example that I found interesting is this is the 2008 crash. This is the unemployment rate that followed the 2008 crash. Anywhere that's highlighted, these are areas of what's called recession. So this is periods of recession anywhere that's highlighted. And what was interesting to me, and what I kind of would have anticipated out of this crash, I would have definitely anticipated that the unemployment rate would have gone up, and then I would have anticipated that as the crash resolved, the unemployment rate would have resolved in an equal fashion. And one data point that I found interesting that I just learned about using this tool is that that's not the case. We have a big crash. We have a huge spike in unemployment up to about 10%. The crash resolves, or I say it resolves. We're back to pre-crash highs by March of 2013. So obviously it took some years, and we could see that the unemployment rate was still at 7.6%, where before the unemployment rate, or rather before the crash, we were at, about 5. So still an uptick, 50% uptick, that took quite more years, 2 more years to resolve. So it's just a way to, in my opinion, like glean a better understanding of these fundamental data points. Another one that was called to my attention was the credit card balances. Hold on one sec. Credit. I believe it's this one. Yeah. So this is kind of concerning, in my opinion. We could see that So this is the, excuse me, this is the COVID crash. At the height, or the pre-COVID highs, we had about 852, I believe it was trillion, or billion, it was billion, yes, 852 billion in credit card debt. This debt got paid off over the course of about a year after the COVID crash, to the tune of $100 billion. We paid down $100 billion. It got as low as $741 billion. Well, now, where are we now? Post-COVID crash, but almost a year or so, almost 9 months or so into this bear market, and we have more consumer credit card debt than we've pretty much ever had. 7.5% higher than pre-COVID. That's concerning, right? Where the market's losing value. People are concerned about the potential for job loss in the future. Consumer credit card debt is at an all-time high, 10%, 7.5% more than pre-COVID. All things to be thinking about as we make our plans for the future, whether you're investing, whether you're trading, however you're looking at the markets. These are things to think about, and this Fred data allows us to kind of, just look at things in a new way. So play around with it. If you have any questions about it, do feel free to hit us up do feel free to hit up our customer support team. You can contact them via the contact us button down there in the bottom right-hand corner. They can answer any questions that you have. Second thing I want to show you. I think I have it up here. Market Breadth. So again, Market Breadth has been on the platform for a little while, but the piece that we just recently added is this new net highs and net lows. This is really interesting because it gives us an idea, a very simple idea of, are stocks making new highs or are they making new lows? And in like how quickly are they doing so? Is it increasing? Is it decreasing? So over the past, let me go, if we click on the three dots here, we can choose the index that we're looking at. So right now I'm on the Dow Jones Composite. I'm going to go to the NASDAQ NMS. We're going to let this load real quick. This is just going to give me an idea of what names or how many names are making new lows versus making new highs. And that's a really important thing to understand, right? Like knowing just what's going on with net highs and net lows. If new net highs are being made, obviously that's going to be more bullish. That's going to be more risk on. If new net lows are being made, that's clearly risk off. If we're somewhere in between, that's kind of interesting. Like we can see that we hit kind of a new low. Well, not a new low relative to the May. We hit a big low in May. And we've made new lows in price, but we haven't made new lows in stocks making new lows on NASDAQ Composite. So this is kind of like a divergence in a way, right? Same way you would use RSI with price or something. We're making new lows in price, but we're not making new lows in stocks. It's kind of interesting. We can see over the past, couple of week or so, week and a half, the net new lows are decreasing rather. So that's a good thing to see, but we're still below the zero line, which just simply means that there are more new lows being made than new highs, right? This is a bit of a lagging indicator. It's a few days behind, but it's just something to kind of keep watch on. And again, just as a general rule of thumb, if you want to be bullish across the board, you want to see stocks making new highs. You want to see that net new highs number. So you want to see this value above the zero line, everything that's going on here. This is all above the zero line. So, and you can kind of see exactly how this went down. I'm looking at NASDAQ Composite. down here and I'm looking at SPY up here, you can interchange them if you want. But clearly, when net new highs are being made, price is increasing. The second it flips, we go lower. So one thing that market participants might use as a gauge to simply determine, do I want to be more bullish or do I want to be more bearish? Do I want to maybe consider jumping back in as a long-term investor, buying my favorite stocks, holding for the long term? Maybe one thing you want to consider using going forward is this net new highs, new lows, and simply using it as your risk on, risk off indicator. If we're above, then you're willing to take these longer positions. If we're below, then maybe you're not willing to take these longer positions. If you're day trading, maybe you're using this as a simple bias indicator. If we're below, I am leaning more bearish. I'm selling rips. I'm, that sort of thing. If we're above, then you're buying dips. Something to really watch and kind of watch what's going on across different indices as well, or different sets of stocks. So this is the NMS composite. I'm going to go to the NYSE composite. Obviously, that's a slightly different list of stocks. And we're going to get a similar look from the data, but it's going to be slightly different, right? Obviously, you're going to probably want to pay attention to what's going on any of the major indices. It could be the NYSE. You could see here the NYSE kind of made, let me see. Yeah, NYSE made its low, made its proper low in September. So NYSE a little bit weaker in comparison to NASDAQ, right? We have lower lows here, and that's fitting with our lower lows in price. We'll check out Russell 2000 real quick. Excuse me. Russell 2000, same deal, new lows in September. So NASDAQ was the only one that didn't make the new low. Russell made the new low, and NYSE made the new low. So all very interesting stuff. I love these new tools. And again, in order to access them, they're accessible via the other data button. You just click on the three dots here and you turn on Federal Reserve economic data, turn on market breadth. They're going to appear as lower indicators down here at the bottom of your chart. So just wanted to take a few minutes and go over those. Again, if you have any questions about them, do feel free to hit us up in the chat via the Contact Us button. Let me get you guys something real quick. We've got about, what do we got? We got 8 minutes before the announcement here. So I want to get you guys a few things. Hold up. Let me see, Sadie, can I trouble you to get me a discount code link, please? Actually, hold on, I think it's here. If you are not yet a TrendSpider user, but you are interested in being a TrendSpider user, we'd love to have you on the platform. Here is a discount code for you. This is going to be good for, I believe, 35% off any plan of your choice. We offer free 7-day trials on the software. We offer free one-on-one trainings for all of our users. We have live people in chat Monday through Sunday, about 20 hours per day during the week and about 8 hours per day on the weekend to answer any questions you have about the platform. We are here to make your use of the platform as efficient as possible. We want to help you guys. So do not hesitate to reach out to us if you have any questions, you need any help understanding how to use any of the tools. We are here to help you with that. We also have a Discord. Love for you to join our Discord. We're gonna start doing more with the Discord, kind of thinking about different things that we can do, bring in traders and do some Discord only events, those sorts of things. Join up on our Discord. We'd love to see you there. And so with that, I am going to now switch us over. What would you guys like to watch? Part of me feels like we should just watch the index ETFs on a little small time frame. How are you guys thinking about this? Is this kind of where your head's at? Let me add non-regular trading hours so we can kind of see what's going on here. If you guys want to watch something in particular, I'm totally down for like futures. We could throw up futures, or we could just do index ETFs. Totally up to you. While we're waiting, let me see. Jammin. Yeah, man, good to be back live. It has been a while, but I'm very happy to be here. Thank you very much for being here. Johnny, what's happening? Good morning. Shiro, what will happen with USD? That's a great question. You know, this is something that everybody's paying attention to. On the TrendSpider platform, UUP is going to be the ticker that you're going to want to pay attention to. You know, obviously it looks pretty dang powerful to me. We can go to a weekly here. Is it toppy? Could be, but I don't know. The way that I've kind of been looking at the dollar, at least here, as far as targets are concerned, I've just been thinking about fibs. So high to low from COVID, pre-COVID, down to COVID lows. And 1.618 makes some sense. Brings us to 31.86. Not exactly sure what the equivalent there is on DXY, but that's kind of where my head's at least initially as a target. Austin, what's happening, man? Bitcoin levels. Well, you know, can't help but be watching that low, the June 13th low. Kind of seems like a pretty logical line in the sand. I have to admit, if this chart were flipped upside down, this to me looks like a big breakout chart. Like it looks like it's just on the precipice of making a move lower. You know, it definitely looks like that to me. Whether or not it will this be a falling wedge? It certainly could be. Let me throw up some relative strength here real quick and just see. Yeah, I mean, RSI isn't like super confirming here. I mean, we have essentially what we have. We have this low and then we have this low. And RSI is kind of confirming that. We haven't technically made a lower low yet. So I don't know. We'll see what they do here. But man, if this chart were flipped upside down, I would be interested in a long opportunity. So with it being the way it is, I kind of feel like this thing's about to leg lower. But will that happen today? Who knows? Will it happen at all? Who knows? We have no way to know. TQQQ, you know, if I'm going to chart TQQQ, in my opinion, why chart TQQQ when I could chart NQ, right? Or at the very least QQQ. Since TQQQ is a 3X, I'm pretty much always going to chart the underlying. And for me, that underlying is NQ. So kind of where my head's at with NQ, like I posted this morning on Twitter, was kind of this. We've got a bit of divergence on RSI. You have an accumulation pattern, this falling wedge accumulation pattern. Kind of right after I posted it, it made this move back into those previous lows. So my thought on NQ was that it was the outlier because it made a new low. If you look at ES, same deal. It did not make that new low. It came into it and tested it, but it held it. And then RTY, pretty similar look, except kind of more of a diamond pattern, but it did hold that low. So, yeah, that's kind of my thinking on the indices. All right, we're 629. I'm going to go over to my 3-chart view here. Now, CPI, they were expecting CPI to be 8.1 this month, I believe was the expectation. Maybe y'all could confirm that with me. But I believe that's what it was. Sure thing, Eric. So we are about to get our CPI print. They've been running it up into the print. This should be very interesting to see what they do here, because we really are at pretty critical spots. What are you guys thinking? Do you guys think we're going to end the day strong, end the day weak? Curious where y'all's heads are at. All right. There's the move lower. It's always good when the price falls out of the screen. All right. So, CPI print, no bueno, clearly. At least initially to start. Let me pop up into Twitter real quick and see. I'm sure one of you guys could tell me what the print is. Anybody have a CPI print for me? I'm going to search here and see. $8.2. 8.2 versus expected 8.1, and the market is not happy about it. SPY's down $10 into the 350 range. Hot, hot, hot. Okay. All right. So then we need to talk levels. We need to talk about where this thing might be headed. So one idea that I had, and I have a lot of ideas, so bear with me. One idea that I had was fibs. Measuring fibs from COVID low to all-time high. We could see SPY coming right into its 50% fib pullback here. Actually, let me go to my weeklies. SPY coming right into the 50 here. Oh, darn. Can we see this? Ah, shoot. All right, I'm going to go back to the daily then. Yep, so SPY right into its 50. The Qs breaking through its 0.618. That is less than optimal. Truly less than optimal. But holding right on that 50% retrace. And then on IWM, we've broken the 50% retrace. And our next level, 152, the 0.618. There's a ton of different ways that you could think about where price might find some support. You know, for anybody who's been on the show with me before, you guys know that I'm a price action guy. So I'm always looking at levels, horizontal levels. Other people use moving averages, Bollinger Bands. You know, there's so many different ways. I saw a lot of folks talking about this 50-week moving average. This is the blue line right here on all of these charts. SPY breaking below its 50-week moving average this week, and obviously it's trading 350 now, so well below it now. Qs broke it. IWM broke it. You know, in theory, we could change up that length some. Oh, I'm sorry. This is the 200-week moving average, not 50-week. My bad, you guys. 200-week. Oh, Sonia, what's up? Good to see you. I'm going to go back to the small time frames here. So pretty nasty little sell-off on only a 0.01 increase relative to expected. So that's pretty concerning, yeah? That seems concerning to me that that small of an increase relative to what was expected could cause such a dramatic drop. Kind of suggests that this drop was pretty much gonna happen no matter what, in my opinion. If Outlook was 8.1 and it came in 8.2, it's really not, I don't know, it's just not that much different in my opinion. I don't know, what do you guys think? I know there was lots of talk about PPI yesterday. PPI being the producer price index. So I actually just kind of learned exactly what this was yesterday. So I'm going to be completely honest about that. Producer price index, for anybody who is not familiar, it's kind of like wholesale. What is wholesale getting paid for things? And that producer price index came in a little hot. So because it came in a little hot, it was anticipated that CPI might come in a little hot as well. So that's what that value is all about. Let's see. Let me add. Throwing in the Dow in there for you, Sonia. So what are you guys thinking? How are you guys feeling about this? Did we expect this? Did you guys plan for this? Were you positioned accordingly? How are you guys playing this event? Were you sitting on your hands waiting for it to play out, or were you totally banking on this move? Very curious to know if any of you guys caught this. What's up, Eric? Austin? Good to see you guys. That 350 level on SPY. Clearly a big spot. Okay, Brad. Brad, talk us through your trade idea. What are you thinking? Shiv Kumar, what's up, man? SPY puts, Microsoft puts, Tesla puts, and Walmart puts. Man, all right, let's go. Oh, you sold. So you were short. Took 20. Let's go. Bradley, my man. Telmo, 3.5K. Let's go. Nice trade. Up 500 on the SPX call spread. Nice. Good job, Jamie. Chewy. Let's talk about the dollar. Let's go back and see what's going on over there. Let's look at the 10-year. Look at oil. Oil failing. Oil just took out the lows. What's up with VIX? Yeah, good idea bit on VIX, Austin. Is TVIX still a thing? Banks. Let's look at banks. Bank of America getting rocked. Go to Faz here. Faz getting hit. Cryptos. What's up with crypto? Crypto bouncing a bit. This thing looks like it's about to dump again. Bitcoin, same vibes. Yeah, this is nasty, y'all. ARKK. Yikes. Kathy is not happy this morning, I would imagine. All right, so let's talk about potential other levels. I'm just going to use futures here. Yeah, so futures right into a spot that I had, that 10,562. Looks like they're failing below it. Ooh. Yikes. Pre-COVID highs, 97.31. That could be a spot. 10,000 seems like a pretty logical spot on NQ, right? Just as far as psychologically, seems like a pretty decent place to be looking. We've got these little, what is this? This is July 2020 lows. Kind of this area in here I would anticipate would maybe give us a little some kind of support. You've got this low right here, that little swing low there. That could be something. We might have to watch that. I kind of feel like they're coming for these pre-COVID highs, somewhere in that 10,000 range. If we go to Russell, the same deal, right? Russell already lost them. Here's your pre-COVID high. And we have lost it, and we are going to head lower. So I got 1575, 1478, somewhere in this range in here. Might be a spot we might be looking for. Does not look good, Robert. Does not look good. I agree with you. On ES, pre-COVID highs, 33.89. That seems logical. Anywhere in here seems kind of logical. 32.8. 32.80 to 34.50, somewhere in that area was kind of where I had my eyes. SMH. Yikes. So we got that October 2020 pivot low. It looks like it's coming right into, let me go to the daily here. What are we trading? 169.43. Okay, so it's lost that October pivot. Coming into the September 2020 lows, 163 area. Could be a level of interest. I mean, it's right there. Pre-COVID highs are all the way at 152.62. That could be something. Let me go back to the indices here. And they are coming back into their initial reaction lows. All right, Sonia, you have a great rest of your day. We got IWM making a new low here. We got the Dow making a new low here. We got QQQ and SPY are both trying to hold on. My guess is that they will not. What's the bottom for bonds? That's a good question. I don't know. Interesting. So I haven't looked at this in a long time. I had this level 102.95. Then you've got 97.49. 97.49 is a pretty clear spot. We could be getting there. We go to the monthly. Yeah, I would kind of put the lows here on bonds somewhere between, and you know, this is just based off price action. It's not based off of any fundamentals. But I would put it somewhere in this range, like 97. I don't know. They're right there at it, huh? Somewhere in this range, 92 to 97. Looks like this was tested. This low was tested 3 times. I don't know. They could bring it into 86 and just take out all the stops that are right in here. They could do that. Really hard to know. Check the auto trends on which chart, James? Right here. Yeah, I'm not the biggest fan of diagonals, but I mean, nothing. I have nothing against them. Is this the guy you're referring to, James? Well, we might have different settings. So our settings, depending on what your settings are, I might get totally different things too. DXY 114. So we unfortunately do not have the DXY chart on the platform. But we do have UUP, which is the ETF equivalent. So currently, UUP, yeah, I mean, UUP is gaining, that's for sure. Still hasn't made a new high yet, but I would assume it's probably going to. Head over back to the indices, and as we projected, we got new lows. New lows on SPY. New lows on the Qs. The way that I played this trade was yesterday. I took big out of the money calls and puts. I took long AMD 65 calls for Friday, which is like maybe really stupid. But that's what I did. And hoping that in kind of assuming that maybe like if we had a big move, since we had such a nice tight little pattern down here, if we got a big move to the upside, I figured this one might kind of rocket. So I had 65 calls, and then I had 340 SPY puts. So those 340 SPY puts are going to be printing, and the AMD calls are going to be a big fat zero. All right, guys. So it's 6:50. We have about 10 minutes remaining. I want to alert you, or make you aware, rather, of something very cool that we've got coming up here this weekend. Let me get a link real quick. I believe we have a link for this. Sadie, do we have a link to the digital event? I believe we do. Hold on. Maybe it's on the TrendSpider YouTube, or TrendSpider Twitter. I want to get you guys a link. So we've got this really killer event on Saturday. big macro discussion with some absolute studs. Truly, some absolute studs. I'm trying to find the link to it. Here it is. Oh, well, no, this isn't a link. Shoot. Well, anyway, we've got Brent Kachuba from Spot Gamma. We've got Theta Warrior. We've got Jim Ropel. We've got Scott Redler. We've got Ross Haber. We've got Matt Caruso. We've got Hugh Henney. Hugh Henney. We got them all. And we're going to be discussing the macro environment. Now, these guys all come from kind of different schools of thought, different wavelengths, different views on the market. You know, Jim, he's a big hedge fund manager. He has a big worldview. We've got technical analysts, right? You got Scott Redler. You've got Theta Warrior. These guys are technical analysts. They're going to be talking through what is going on the charts technically. They're not as concerned about the big world view, about the fundamentals. We've got Ross Haber. Ross Haber's a Can Slim guy. He's going to be talking about future leaders. You know, like what to be looking for the next wave of leaders that are going to emerge out of this bear market. We got Matt Caruso. Matt Caruso, big fundamentals guy. Actually, Matt Caruso is the creator of the net new highs and new lows indicator that I went over earlier on the program. So he's going to be there talking about kind of some of these bigger fundamental worldview things. Hugh Henney. Hugh Henney also big fundamental worldview things. Hugh's going to be going over kind of more this Fred data that we kind of went over at the beginning of the show too. Spot Gamma, Brett Kachuba. Spot Gamma is all about options and watching options flow to glean an understanding of where the market is positioning. He's got some pretty interesting ideas based off of all the data that they collect. And the options market, where the options market is saying we're headed. It's going to be a killer event, is what I'm getting at. It's going to be a killer event, and we'd love it if you all tuned in. I still need to find a link to it. We may not have a link just yet. Quite a lineup indeed, Robert. Quite a lineup indeed. Let me see. Well, here we go. All right. Here we go, guys. I got y'all. It is on TrendSpider.com/TV. And this is this Saturday. It's going to be about a 4-hour event. So, you know, pop some extra popcorn, get a 12-pack of beer, come hang out while we discuss all things macro with some of these really great minds in the trading and FinTwit community. It's going to be really, really fun. I think we're going to learn a ton. And I'd love for you guys all to be there. So please be there. Again, Hugh Henney, Matt Caruso, Ross Haber, Scott Redler, Jim Ropel, Theta Warrior, and Brett Kachuba from Spot Gamma. Absolute banger all-star list. Super, super stoked about it. What else we got, guys? Let me see here. Need more than beer? Pop a bottle of bourbon. Exactly. So we need to figure out, y'all, when we want to go live again. You know, obviously it was important for us to be here for this CPI print. When do you guys think would be a good time to kind of hang out and talk shop again? I'm curious what you guys are interested in. I'm curious what you guys are watching. Big data things that are coming up in the future. The first thing that comes to mind for me are earnings. We've got a lot of earnings coming up here in the coming weeks. We could do a little scanning and see what all's coming up. Let's do that real quick. I'm going to go to NASDAQ 100. And I'm going to scan for some earnings. So condition, earnings, dates, within the next, let's say 14 days. Let's see what's coming up. Oh, everything. All right, you got Amazon. Let me see here. Amazon earnings are what? October 27th. Okay, that's an idea. Google earnings? Google's kind of boring these days, isn't it? What about Apple? Apple earnings, October 27th. This is going to be a huge bellwether for the markets. How does Apple do this quarter? I don't know. What do you guys think? Should I go live for Apple earnings? October 27th. What day of the week is that? It'd be next Thursday. I believe that'd be after the market. What's up, Lori? How you doing? That'd be after the market, so that would be like a 2 p.m. or a 4 p.m. stream. Would you guys be around? Would y'all want to join me for something like that? Let's see, Tesla. Tesla on the 19th. That's in a couple days. Anytime is a good time. Robert's always ready to hang. Maybe we'll do Apple earnings. That would be kind of cool. Just because Apple, like I say, Apple's a big one. Apple's a really, really important one. I know a lot of people have talked about that 150 level on Apple. Obviously, we're trading well below that now. A lot of people talked about that 150 level as being the line in the sand for the markets. And I could see why they'd say that. So maybe that's what we'll do, y'all. Maybe we'll go live for the Apple earnings on the 27th. We'll be thinking about this a bit more. If you are not yet following TrendSpider on Twitter, what are you doing? Follow us on Twitter. If you're not following me on Twitter, I mean, I understand, but I would be appreciative if you would follow me on Twitter. That'll be the first place where you will know when I'm going live again is through the TrendSpider Twitter and my Twitter. So I'm going to talk to the team, see if we want to put together something for the Apple earnings on the 27th. And we'll try and plan on that. Bruce, what's up? You're late, my man. CPI was 8.2 against the 8.1 expected. So last thing here, y'all, before I get out of here. Anybody who's not a TrendSpider user, if you are trying to trade these markets, and you don't have a proper trading platform and you're interested in technical analysis, you're going to want something. TrendSpider is the best of the best. You will not get more features than what you can get on TrendSpider anywhere else. From scanning, alerting, back testing, unusual options data. We have so much crazy information and so much crazy data on this platform. It's unreal. If you're trying to trade these markets, you're trying to understand what's going on in the macro view, seasonality, things like that. The Fred data. Get yourself a proper technical analysis platform. I have a discount link for you. It's right here. It's 35% off. Any plan of your choice, monthly or yearly. 7-day free trials. We have free live customer support Monday through Sunday. Monday through Friday, about 20 hours per day. Saturday, Sunday, about 8 hours per day. These guys are here all day, answering questions, hosting live streams, hosting webinars, hosting individual users for private one-on-one sessions. We take great pride and great care in trying to get our customers as tuned into the platform as we can get them. No question is too small. No question is too simple. No question is too big either. Hit us with what you got. We're happy to help you in your path to getting very comfortable on the platform. We're here for you guys. So hit us up in chat if you have questions. Sign up for a one-on-one training if you feel like you need to. You can do that by clicking on your name. Top right corner, scroll down to where it says schedule training. You will not see that on my side because I'm an employee here, but you will see it on your side. Click that. We'll send you to a calendar. You can sign up for a time that suits you. These are 45-minute long, free one-on-one training sessions to get you comfortable with whatever tool on the platform you're having trouble with. So with that is my spiel. I'm going to close out the morning here. I really appreciate you guys all being here. This was fun to watch the markets with you this morning. It'll be interesting to see kind of where things head once the market opens here in half an hour. So if you're trading today, be careful, stay light, stay agile, have fun, trade them well. Have a great morning. Have a great rest of your week. Have a lovely weekend. It's fall where I am. The leaves are changing. It's beautiful outside. Go outside, touch some grass, but not on Saturday afternoon, because on Saturday afternoon, you're going to be watching the ultimate macro market analysis event right there on TrendSpider TV. I linked you to it once. I'm going to link you to it one more time. If you're curious about what some of the experts think about what's going on, what we've got coming up here over the next quarter or so, next quarter or two, tune into this event. It's going to be awesome. I think you guys are really going to enjoy it. So again, with that, I hope you guys have a great rest of your day. Trade them well out there. Be safe. And we will see you all very soon. Hopefully, let's plan on Apple earnings, okay? Let's plan on Apple earnings. That's the 27th. And if anything changes, I will let y'all know long ahead of time. But it's been fun hanging out with you guys this morning. I can't wait to do it again. Have a good day, and we'll check you later. Bye-bye.